Let's launch this hour with a good conversation on markets with a veteran Canadian money manager and a familiar face to viewers of this channel. Patrick Horan joins us now. He's a principal at Agilith Capital. Patrick, it's great to have you with us. Thanks for making some time. You know the story. Markets today at record highs. The TSX at a record high. Two of the main benchmarks in the U.S. at record highs. You, however, remain skeptical, very skeptical, on what lies ahead for U.S. capital markets, including U.S. stock markets. Tell us why.
Yeah, well, our view is that the Trump administration and their policies are going to scare capital out of the U.S., weaken the U.S. dollar, really debase the fundamentals that have been driving the technology sector, and really make fixed income assets a zero-sum game in terms of any returns. We think part of that is playing out. We're a little surprised to see technology come back so strong, but we're still very much in the early stages where the amount of spending on AI is being forgiven as just an investment in future growth. So, our preference is Canada. Our preference is the rest of the world, actually. It's cyclical. We do see inflation coming back. It's very sticky. These are long cycles that I'm talking about. So, years, 5 years, 10 years. The U.S. clearly is going to spend their way out of a very high level of debt, which means inflation. It means persistent inflation. And so what we think is happening right now is the market is moving away from bonds, which are underperforming again, I think for the third or fourth year in a row. And they're moving into equities, and that then the shift into equities is starting to take hold into value, into industrials, and we also like non-US dollar based equities. So that's where we sit. It's not a perfect call, but it's a pretty good call at least from the returns of our portfolio.
You are not persuaded at all by headlines like we're getting today on U.S. and China. China confirming a U.S. trade framework. Commerce Secretary Lutnick in the U.S. saying that deals are in progress with numerous trading nations. You're not of the view, in other words, that in time this tariff turmoil and confusion will get negotiated down?
I'm highly skeptical. I mean, you look through these trade agreements with a very close eye, and you find that there isn't much substance to them. And Trump is I'm very surprised because he's a business guy. And yet, actually, he tries to tell it like it is sometimes. But man, is he ever political in terms of his views and how he promotes stuff? He's very promotional. And you look through it and you go, there was no call for that. There's no call to talk about how he obliterated the Iran's nuclear program. And they're just when you actually look at the substance of it, it's not there. So I look at it as noise. I don't pay any attention to it. It's in the background. It's buzzing away, we see this as just a distraction to really what is a great opportunity for Canada and the rest of the world. So the trade stuff, it's on, it's off, it's on. I mean, who can follow it really?
So you like the rest of the world, but you really like Canada, because I'm seeing in a recent note to your clients, you told your clients, our investments have been 100% Canadian over the last few years. So you really like the Canadian market. Yeah, we do.
The Canadian market's, it's got great value. It has underperformed. We think, these market forces that Trump is trying to actually overturn, and who knows where it goes, are going to be a tailwind for the Canadian market. There's a lot of stocks that are cyclically based that have underperformed. The fundamentals are good. These are big benefactors of inflation. And we think there's lots more to go in terms of where they're at. So Our portfolio has performed, I would say, very well over the past 3 or 4 years, 5 years even. I see no reason to take the risk of buying a stock that trades at, above 10 times sales and has this huge risk in terms of how technology unfolds. And it's a confidence bet on what does AI look like? Who's the benefactor? Where in the food chain does it affect, have the most leverage? These are really hard decisions right now. No one really knows the answer to this. And yet you're buying stuff that's, 30, 40, 50 times earnings. Makes no sense to me. Whereas on, the portfolio that we're looking at, we have, on average, a PE of around 12, free cash flow, double digits, growth, earnings growth of 9 to 15%, good dividends, very healthy balance sheets that are not leveraged. I mean, you can't go wrong with that portfolio. We are like surprisingly over the past few years, very like lower volatility than the rest of the market, which is an unusual place for a portfolio that is cyclically orientated. And it tells you there's just an underlying bid to the names. And there's a skepticism of really the stuff that has performed historically over the past 10 years. And we feel it. As the market builds, we get more confident. We see it play out in our names. And, I think I've said this to you before. The secret to a great portfolio is buying cheap stocks that fundamentally start outperforming on their earnings, and they get price momentum. All three of those factors are beautiful things because they don't stop at 20%. They just keep going. They can be doubles and triples and even 10 baggers if you hold them over a secular period. So that's where we think we are. It's almost like the AI and the technology piece is almost a foreign asset for us. It's so far removed from our thinking.